Hey snipers, Foster here. Hope you guys are having a great day. Today I'd like to talk to you guys about the Elliot wave theory. And the Elliot waves were actually an invention of Ralph Nelson Elliot at the beginning of the 20th century. He was an American accountant and author who was also a stock market trader. And he came up with his theory because he thought that a lot of trading and a lot of charts were based off of a cyclical nature. It's like there was always a repetitive pattern found. Best way to show you guys this is just to go straight into Coinigy. In this case I got the Bitcoin US dollar, a 2-hour chart. And then before we go into the chart, I would like to show you what Elliot waves are all about. Basically, Elliot waves, or the wave pattern, consists of two parts. The first part are 5 waves that follow a trend, where it's an uptrend or a downtrend, followed by a correction of 3 waves, legs. Some people call them legs. What I've done here in Coinigy, under the 1, 2, 3, 4, in the 5th menu, you can choose the Elliot impulse wave and the correction wave. We're going to be looking at those two. I've added these as favorites to this little bar here. So all I have to do is click them here to use them. So usually what happens is, after there's been, for instance, a downtrend, and there's been some stability showing that an uptrend is up and coming, what happens is usually the first lag happens. And so this is when the early money gets in. And usually when that happens, there's always a little profit taking. There's some people who are selling, so price will go down. But then the real move comes. That will be actually the third lag. This is where basically smart money, in these 3 steps, smart money is moving into the market. What happens then is, of course, people take profits. Number 4, but what's also important is that people who missed out on the smart money, I guess the not so smart money, if they want to go in this trend, you know, they want to see some sort of correction before another up move. So when we go into leg 4 and 5 to our top, where the price will be going in this example, this is basically where slow money will move in. And so there's a couple of things important here. First of all, this third leg can never be the shortest. It doesn't have to be the longest, but it can never be the shortest. So if somebody draws you an Elliot wave pattern and the third leg is the shortest, they're wrong. You gotta go back to the drawing board. Something else. This number 4 can never be below number 1. So this, let's say, this can never happen. This is impossible. 4 can, well, of course it can happen, right, in charts, but then it is not an Elliot wave. Just like when number 3 is shortest. Let's say we have this example. This is not possible. This is not an Elliot wave whereby number 3 is shortest. Okay, so number 3 has got to be not the shortest one, and number 4 has got to be above 1. Same counts, by the way, for going down. Okay, so we have a, let's redo that. We have a downtrend, small correction, downtrend, small correction, downtrend. Okay, so here you can see number 4, in this case, is not above. Okay, number 1. This is not possible in Elliot waves. Just like the number 3 wave cannot be the shortest. Sorry, the lag, number 3 lag. Okay, let's go back here. So we got our trend, and then that's the second part of Elliot waves. There's got to be a form of correction, which consists of 3 legs called A, B, and C. So usually the price would go down. So this is the first correction. It's basically going against the upwards trend. Then you get one that's going with the upwards trend, and then you get another down leg. So what you see here, this is a full Elliot wave pattern. So what I want to do is show you guys how this looks in Bitcoin. And one of the downsides of Elliot Waves is that this is very subjective. I can see things that other people will not see, and not so much because I see them better, but maybe I see them wrong. And these waves still fit my theory, or at least I make them fit. So the question is, of course, how do you know when somebody is actually drawing the right waves? Well, just like I said, you have a few rules that have to comply, but there's a lot of possibilities. So let's see. We have Bitcoin here, and the question is, of course, where do you start to draw your Elliott waves? People would say, well, you start at the bottom, right? But starting at the bottom and the lowest price is not the right way to draw an Elliott chart. What you need to have at least basically confirmation that a new high is actually stable enough to form as a support line. So for instance, what we see here, price is going up, and this is our new high right here, right? So this is going to be our new high, okay? And then there's a correction, and then there's a new low, and then we have price going up to a new high right here. And price will go down again. And so this downtrend, the question is how much this top is being tested. So what happens here is this area is being tested, and supposedly it works, or actually it does work. So we have higher highs and we have higher lows, and this one will actually basically trigger an Elliott wave. So this would be our start of the Elliott wave right here. So we will go up, then we will correct down, right? That's our second leg. Then we have a third leg going up here, then we have a fourth leg, and we have a fifth leg going there. So this would be an example of how you can draw Elliott waves, right? So the third leg is not the shortest, that's the fifth, so we comply with that rule. And the number 4 here, as you can see, number 4 here is higher than the number 1. So that is also something that is acceptable. Plus this retracement back to 0, basically, from 2, is not fully negative. If this point were to be here, then it's also not an Elliott wave, by the way. So this would be our first positive flow. Then we have a correction. Okay, so where's the correction? Well, the correction starts here. It'll go here, then it'll go up again, and it'll go down again. So this is what I would see as a correction. People can discuss. You can say, hey, it's going up here and down. But the downtrend in general continues, right? So that's one of the things that sometimes these small legs are built out of sub-steps. So I'll show you guys when we go up here, because the continuation will be another 5 steps. So the first step would go to this high, then we go to this low, then we go to this high, the third leg, definitely the longest, correction, and this one, right there. So once again, we see that the third one is not the shortest, and number 4 is above number 1. And what I wanted to show you guys, and I'll use a slightly different color, let's use blue for this one. As you can see, this first leg, you can actually draw small Elliott waves inside. You know, 1, 2, 3, 4, 5, right? 1, and here we go very subjective. 2, 3, 4, 5. And so you see that these upward legs consist of their own Elliott waves. And if we zoom in time levels, you can do even more. You can constantly fill out more Elliott waves inside of each other. So this is going to be 1, 2, 3, 4, 5. Okay, so here you see that the big 1, 2, 3, 4, 5, that 1, 3, and 5, you can also draw these in there again. They basically stack on top of each other. So let's remove these three, because now we come to a correction, right? So this is going to be A, B, and so where will this go? That is a question. We're going to go down here, we're going to stay here. Let's say for argument's sake that this support level will hold around here. And then the next step would be how we're going to go up. Is it going to be 1, 2, 3, and so on? So this is the there we go. This is where things become basically when you start to move on to slippery surfaces, because we don't really know what's going on here. Although we can say that we're in a correction here. Of course, one of the things we can always do, right, is add the RSI, add the MACD, and start seeing where we're going, right? So right now we were going down on the RSI on being sold. We go a little bit up. The MACD itself, this is hard to read, I realize that. Let me see. Okay, so what we see here is, and I'll change this one too. Where are we going to go? Right now we're neutral on the RSI. The MACD is slightly bearish. We thought it was going to cross, but it didn't. So we're probably still in a downtrend. Of course, adding the Bollinger Band. Well, it'll show that we're in the lower parts of the Bollinger Bands. And we seem to be heading into we're in a very little squeeze. So, whoops. Basically, we are in this correction, and it needs to be completed for the Elliot Wave cycle to start a new one. So I hope this brings you guys a little bit more clarity on what Elliot Waves are and when and how to use them. It's very subjective, once again, because some people will draw other patterns starting at different areas. So to summarize, it's important that you start at a proven support level that basically works out with the previous high, so this area. You got to make sure that 2 is never below 0 and 4 is never below 1, and that the number 3 leg is never the shortest. That is very important. So I hope you guys like this video. I hope you understand it, what's going on, and all I can say is snipers out.